And last week we talked about how to identify a fake market structure shift, and we talked about when to know the market structure shift is going to change. That is analyzing from the higher time frame, the monthly, the weekly, the daily, going back to maybe looking for a fair value gap. We also discussed about fair value gap. Spot the fair value gap. Once price get to the fair value gap, go to the lower time frame to look for a market structure shift that close with a full candlesticks above or below a lower or sorry a previous lower high or a higher low. Okay. If you've been following what I've been teaching, I'm sure that's not going to confuse you. But this is what we faced last week. We also talked about Fibonacci retracement too. But today we're going to talk about candlesticks and how to read them properly. Alright, we're not going to. There's this PDF. It's called the Candlestick Masters. I think it's called Candlestick Masters. Right? They just give you guys the drawings. They don't explain to you how to read it properly. Okay, they give you the patterns. I'm not going to share that PDF here because I want you to be able to look at a candlestick and be like, I know what happened here. And this might happen next in the next candlestick. Okay. This is one of my favorite thing to talk about and to teach because I use it a lot. Especially when price is at my entry, I will go to a lower time frame. I'm trying to read the candlesticks to know if it's going to go up soon. I don't enter on impulse. That's why most days, most weeks, I might not take trade because I'm waiting for that confirmation. And also, it will help you set your stop loss smaller. But we'll talk about stop loss some other time. Now, we're talking about how to read your candlestick properly. So, sorry. To learn how to read a candlestick, you must know what open, high, low, close mean. I'm reading here. And open, low, high, close. So to learn how to read a candlestick, you must understand what this means, right? That is open, high, low, close, and open, low, high, close. Okay. Now, for the case of for the case of uh open, low, high, close, this pattern right here, this board right here, that is OLHC. It means open, low, high, and close. For the case this may be, this is for bullish. Alright. Whenever I hear someone talking about today did a open, low, high, close, just know they're talking about the day went bullish. Right. So these are bullish candlesticks right here. Now, this is the previous hour. Let's say this one is 7 a.m. or this one is 8 a.m. Now, learning how to read candlesticks has a lot of advantages. You can even read candlesticks without getting a proper analysis and still find yourself a good trade. Yes, and you can use reading candlestick as your edge. Right, tie it alongside with knowing the bias for maybe the week. So now, when we talk about open, low, high, close, this is where the market opened. Now let me use here. Now let's say the time was 7 a.m. This candlestick has not appeared yet, right? But we're anticipating the next candlestick to open, right? So the 80, let's say this is a 1 hour time frame. Okay, this is a 1 hour time frame chart. That is, this candlestick determines 1 hour. The next candlestick is going to be the next hour. So price is about to close. Let's say the time was now 7:59, and you know the next candlestick is going to come up, right? When the candlestick comes up here, this is where it's going to come up. Here is known as the open. So that's when the candlestick opened. All right. Here's the open. Sorry. Here's the open. This right here is the open. Why this? This is the open. So that is where this candlestick open. That is the close of this candle, right? At 7:59. We close of this candle at 7:59. That is when the time got to 8 a.m. This was when the market opened. This was when the movement started. So this is the open. Here as the close. Sorry, the low. My fault. Here is the low. While this is the highest point that this candlestick got to in an hour. This is the high. I'm so sorry. Uh, this is the high, right? This is the highest point that the price got to. Why this is the close. This is where the market closed. Okay. Now I want you to keep this in mind. When bullish, when bullish, right, in a trend, the candlestick tends to open and sell first before buying back up. Now, you can see that price tends to, when price opened here, price first of all sold down. It definitely sold down. You'll see a bearish candlestick here. Then it went back up, leaving this week. So keep, I want you to write this down. Majority of the time when a new candlestick form, price goes the opposite way before going to the real direction. That is, price manipulate first. There's this stuff I use. I don't know if I can find it anymore. I don't think I can. Okay, this it. It is not it. I'm so sorry. It's not it. It's not the one. Ghost feed. This is it. Yeah, this is it. Perfect. Um, now let me give you an example. This is the opening. This is where price opened, right? If you go down, this is a 1 hour time, 1 hour time frame candlestick. If you go down to maybe the 15 minutes, you will see something like this. Price will go down a bit, then it will go back up. Sorry, then it will go back up to maybe here and closed here. Now, if you go to the lower time for this, what you might see. So, which means price opened, went down a bit. That is the manipulation. It's called the manipulation. Price opened, manipulated, and went to the direction it was supposed to go. Okay. So open, low, high, close is suits and is for the bullish candlestick. Okay. Now moving on to open, high, low, close. Let's move on to open, high, low, close. All right. This is a bearish. Let's take this bad boy up here and front it a little bit. Now this is a bearish candlestick for 1 hour. We're using 1 hour as an example. So now I've explained what open, low, high, close mean. I want to give you guys some time to try and identify where the open of the bearish candlestick is. I'll give you guys some time. Right. I'm sure you guys said here is the open, but no. Here is the open for the bearish candlestick. Alright. And so people will be asking me, why is the open over there? I will show you what. Just give me a sec. Yes. Okay. Let's do it. Oh my God. You know what? I'm just gonna put it here. I'm just gonna put it here. Okay. Now, in a bearish candlestick, right, in a bearish trend, the market price is going down. So once this 1 hour candlestick is done, when this one is about to open, it opens here. So it's more like the opposite of the bullish. When price is buying, when this after this candlestick, the price wants to make this other candlestick, it will start from here, this point. This is the open. So for the sell, it should start from here. So here is seen as the open. Now I'll give you guys this. I'm sure people can get the rest yourself. This one is now the high. This one is the high. While this one is the low. Open, high, low, close. Okay, that's very, very important. While this is the low. While this is the while this is the close. Oh, coming back. While this is the close. Okay. So for a bullish trend, if market opens, it manipulates first. So keep it in mind. Most of the time when a price is moving to a particular direction, right? The market tends to manipulate first before it goes there. So this is a how your hourly time frame. And when this price opens, that is right here, it went down first, it manipulated, then went back up. So when this 1 hour bearish candlestick form, it bought first, you understand that's a manipulation because it's selling. It bought first, made the high, passed the open, make the low, then closed around here. Okay, I'm sure you guys already understand that. So this is open, low, high, close, and open, high, low, close, open, high, low, close, open, open, high, low. So after knowing this, right, this is the foundation of how the foundation you need to be able to read the candlestick. Okay. Last week I talked to you guys about fair value gaps, right? I told you guys about fair value gaps. We're going to use fair value gap as an example. Okay. Okay. So let me take off. Let me take off this voice. Let me take off this guy. All right. Let's say this is a bearish candlestick, the bearish trend. Okay. Let's give it another big. Let's put here. Let's put here. All right. Last week, I told you guys I explained some certain things concerning fair value gap, right? And I don't really need to explain much of it this time around. So let's say here is the fair value gap in the chart. This is the fair value gap in the chart. Fair value gap in the chart. You know, this space in between these two candlesticks. Here is the fair value gap. And price went ahead, went back down to try to touch, I'm sorry, no, I choose that, to try and touch the, I'm supposed to be receiving a call soon, to try and touch the fair value gap. It did touch it, right? Let's say it touched it. And this is the open right here. Give me a sec. This is the high. Now price did this. Let's say price did this. Let's say you are, this is a fair value gap. Where does a fair value gap? As most cases, price will go back to the fair value gap, sweep it, that is clear it, fill the gap and go back up. You have that in mind, okay? And you know how to read candlesticks with open low high close and open high low close. Now let's say this is the hourly candlestick and this next candlestick was about to open and price went down to completely sweep or eat off the fair value gap, right? And it went back up. Now you ask yourself, the candlestick is not full. What does that mean? Leaving this long wick over here, what does that mean? Right? It means that looking at this price, the candlestick opened. It did his manipulation, it bought, so he made it high, passed the open, went down. Now we're reading it. We're reading it. Let me cheat this. We're reading the first of all went down to this spot. Now, after eating up the fair value gap, before this candlestick was to end, price went back up, rejected. So it bought, it rejected to this point and closed here. What would I give you the idea? It will give you the idea that after price swept this place, it was no longer able to go down, make a new low, or it was no longer able to close fully. So the buyers took charge. Price bought, rejecting off this place. Now this here, this symbol you see, you can see it on, let me let me display something. You can see it like this. You can see it like this either. Yeah. You can see it like this either. When the wick is very long and the body is short, all right, it means that this trend is about to shift. Okay, market structure is about to occur in the lower time frame. So this pattern is what we call, this pattern we see here while reading it is what we call the reversal candlestick. Like this part of the candlestick that will show you that the trend wants to reverse. You understand me? In most cases, the next candlestick might be a buy. Majority of the time, it might be a buy because you have a reason for price to reject off this place. Because fair value gaps, I've explained what fair value gaps mean in our last video. Once price get there, it either break through it or it bounces off it. You understand me? So you that is a trader now, you're looking at your chart, you know there's a fair value gap here, right? And the next candlestick opened, went down before the candlestick ended, before the 1 hour time zone passed. You rejected this much, closed. In your mind, it will be like price rejected, it closed. A market structure shift is about to occur. Now, on the lower time frame for this, right? On the lower time frame for this, Sorry. On the lower time frame for this, right? Let's put let's put this. Let's mark it like this. Okay. This is where the market opened. Let's say this line is the opening. That is this opening here. In the lower time frame, will look like this. It will look like this. Then it bought to this high. Okay. It went back down to the fair value gap and went back up to close. Okay, let me try and do this thing again so the candlesticks can show. I'm not really showing you. So it went back down to the close. It went back down to the close right here. This is the line. So the lower time frame is going to look like this. You see the fair value gap right here. It went there, fill it. You see the candlestick. Let's say 15 minutes. Each of these candlesticks are 15 minutes. You see the 15 minutes candlestick sweeping the fair value gap and bouncing back up, right? So the let's say now the next candlestick is about to open. The next candlestick is about to open. Remember, the open is in the previous close. The next candlestick is about to open. Let's say it bought. Okay. The next candlestick is about to open and price did this. Well, let's say price did this. This is gonna be the open. This is gonna be the high. This is gonna be the close, and this is gonna be the low. That is uh, open low high close. Okay, open low high close. So what does this mean? This is okay, this is going to be better if I put it like this. Let's say this is 7 a.m. Here 7 a.m. This is 8 a.m. Okay, this candlestick happened 8 a.m. This candlestick happened 7 a.m. Now let me draw this. Oh my, this is even expired. I'm supposed to check this stuff. Now this whole side is how it will look, how this 1 hour candlestick will look like in a lower time frame. It's there. I'll show you guys a live example, but I want you to understand something. This 7 a.m. candlestick of a 1 hour candlestick here, this rejection, this is how it's gonna look like. So the open, right? Okay, yeah. Sorry, I was a bit lost. I was confused about something. But right, this candlestick right here, 7 a.m. candlestick, this is how it will look like in the lower time frame. Right. Now this candlestick opened up. We already have the idea that a market structure shift is going to occur. We have that in mind. But when price opened, since we had this in mind that price we buy next, the next candlestick will be a buy because price has finished sweeping off this fair value gap. Now, what did I say? When a new candlestick is about to form, it works mostly in the higher time frame. Write this down. When a new candlestick is about to form, note that either buy or sell, the price will manipulate first. Okay, now you're anticipating that the next candlestick is going to be a buy. What will you say? Price will sell first before it eventually goes to the direction, before it eventually buy. Now, This is the time, the 8, this time right here. This is the 8 a.m. time. That is this candlestick. When price opened, that is around here. You can see the line here. When price opened, it sold down. Okay, it sold down. Let's say it sold down here. Right. Upon selling, it then now went back up. Right. It went back up here to this high, then closed here. I don't know why this thing. Let me check the settings. How can I increase the candlesticks to make it more full? How can I increase the candlesticks? Should we go for 120? Yeah. Okay. let's let's oh, I think I'm doing it wrong. Let's leave it at 80 and increase this one. Let's see. Now let's go for what suited best. Okay, this one looks good. This one looks good. Um, yeah. So opening of this candlesticks, this 8, that is this clock. You can see the opening over here. This is where it's open. Let me draw the line so it will be easy. This will be the open. This is the open, right? This is the low. That is this low right here. This is the low. This is the high. That is this high right here. And this is where it closed. That is closed right here. Now, reading this, you anticipated this basically. You anticipated that the next candlestick is going to be a buy, but it will manipulate first. Now, seeing this in the 1 hour time frame, and this is how it looks like in 15 minutes. What can you spot in this chart? You can spot a market structure shift. I don't know why this will keep coming up. You can spot a market structure shift. So, center. Well, the thing is nice here. Okay. You can spot a market structure shift. Then it's confirmed in the lower time frame that price, rather the next candlestick or the next hour is going to be a buy, but it's going to manipulate a little bit before it buys. You understand? You're reading this. Okay. Same goes to sell. You understand me? It is vice versa. For a bearish, now we show example for a bearish, we show example for, sorry, for a bearish, we show example for a bullish. Same goes even for this candlestick still. So upon seeing a candle rejecting, or a candle went to a level, let's say for instance now, this fair value gap doesn't really exist. Let's say for instance, there was a fair value gap here. Let's say there was a fair value gap here, and upon touching it, you know that price will bounce off the fair value gap, but it will manipulate first. So here is going to be the open. You will know it to make the low, sorry, the high, go back past the open of the candlestick, make a low and close. Okay, so I'm going to show you guys a live example. Value graph that I taught you guys, the fair value graph. Okay, it's a very good example in Euro USD. This is the daily time frame. So each candlestick determines a one full day. Okay, now this is on a Friday last week. Okay, this is on a Friday last week. This is Monday yesterday. Why this is today? Upon seeing this, by the way, this week I'm sales this week. I was anticipating price to sweep this high, but it didn't. But I'm on sales this week on Euro USD. So upon seeing price touching this fair value gap and rejecting off, showing me the candlestick reversal pattern, and the next candlestick was bearish. I was anticipating the next daily candlestick to be sell. Okay, I was really anticipating the next daily candlestick to be sell. Now, this is today. If we now dive back, you can see the open high, low. It has not closed yet. It will close in 3 hours time. So it has not closed. So it might make more highs over here. Sorry, more lows. It might make more lows. So now, before this candlestick was to open, I was like, I'm anticipating a sell for tomorrow. That is today. But I was thinking that the manipulation will sweep yesterday's high. That's Monday's high. This is the Monday candlestick. Monday was selling, sold. Sorry. I was thinking that, okay, this candlestick is going to sweep here before I'll start looking for sell to trade down. But it didn't sweep it. It just started going down without me. So I didn't see any trade today. So if you go to read this candlestick, you can see the high, open. It has not fully made it low of the close because the candlestick is not over yet. So if we go to 30 minutes, let's go to 30 minutes. When uh, where is Tuesday? This is where Tuesday opened. So you can see right here that Tuesday opened here. This is the open in the lower time frame. This is what I was teaching you. This is the open. This is the open. What the price do? It manipulated first. It bought first. Upon buying, it went back down to make this is the manipulation. It went back down to sell. What did I tell you? When you're anticipating a bearish trend, after the price open, after the candlestick open, price we buy first, then sell. Now reverse it to the bullish. When you're anticipating a bullish candlestick, price will when you're anticipating a bullish candlestick, price will sell first. Price will sell first, then buy. Okay, so that's how it works. When you're anticipating a bullish candlestick, price will sell first. When you're anticipating a bearish candlestick, the price will buy first. That's the manipulation. That's the manipulation. Sorry, got distracted. So upon seeing this, right? This is the fair value graph right here in 30 minutes. You guys can spot it. Upon seeing this, what did I tell you about the market structure sheet? Right? Price went here. When price was here, let's say when price was here, we didn't know what was happening. He did the first candlestick, it was a weak rejection. He did the second one. I taught you guys to anticipate that this is a failed market structure shift. It's most likely going to buy back. I taught you guys this in the last class. Once the price is not able to close above the the previous low or the previous high. But as for this case, it's the previous low. That's the previous higher low. So price went back up, then came down and closed with a full candlestick, meaning what? Meaning market has changed the trend. That is, market structure shift has occurred. I told you guys this in the last class. Okay, close fully. It now shows us that price is going to sell. Now, looking down to the daily time frame, looking down to the daily time, is this candlestick I'm talking about? This candlestick right here. Looking down to the daily time frame, we were anticipating a sell. I was anticipating a sell. So after price did a market structure shift here, right here in the 15 minutes time frame, we knew that price is going to go down. Now, what most people can do is, if you don't want too much stress, you can easily go for after this break right here, after this candlestick closes, you can easily go for, let's say, you can easily go for a 1:1, whatever suits you, or you can easily take it down to maybe this fair value gap right here. Your eyes have to be sharp seeing these fair value gaps because that is where market is most likely going. Okay, there are many other places that prices that is seen as an attraction. Now, a fair value gap is seen as an attraction. It attracts You get most cases once you attract, it bounces off or it crosses by. You understand me? In most cases, once I'm sorry, once the fair value gap, once you see a fair value gap, price most likely go back there. Most likely go back there to probably cross or to bounce off. Okay, so yeah, that's basically. I'll show you guys example for a buy soon. I'll do that tomorrow. I have to go to the gym. It's already running late. I would have done this since, so but I've just been very, very busy. So I hope this video is very, very powerful. This is a very, very good lesson. It's everywhere. It's in the chart. So what I want you guys to do, don't use Euro USD. Look for either go to either AUD USD or go to USD card. So look for and identify a open high low close and open low high close for me. Right? I want to identify it for me in your chart. That is, I don't want you to do all this. I don't want you to do all this. I want you to I'm coming, someone's calling me. I don't want you to do all this. I want you to identify it like this is the assignment. I want you to identify it like this. Open high low close for either bearish or bullish. Okay, for either bearish or bullish. I want you to identify it. So tomorrow we might hold another class, but I want you guys to know this. So I might give you guys some space for tomorrow to also still learn after all to drop your assignment. Okay. So that's it for today, and I'll catch you guys later. All right.